here first. Bitcoin is going to zero. Zero. When it comes out, zero.
So good. I thought we'd start on that one. Welcome
You heard it here.
Liberate Your Money, episode 21. It's been a couple weeks since I made a video, mostly because I've just been unplugging, been in the woods, turkey hunting, fishing, just kind of getting out of the house, enjoying the beautiful spring weather. Been cooped up because of the coronavirus and just been getting out and just enjoying the weather and getting away. But so we got a lot to talk about, a lot of positive things to talk about with Bitcoin. This coronavirus dip we saw Bitcoin go all the way down to that 3,800 level, and we're already back to the levels that we started the crash when the coronavirus hit. We're already back above that level. And I don't think there's many assets that can say that. I mean, I know gold's up. I know there's probably other assets, but there's not many of them that can say. I mean, if you're looking for a store of value, I mean, Bitcoin basically just weathered, one of the most severe shocks to the system that we've had, and it could have been the most severe shock Bitcoin's seen in its life, and it's already back above where the crash started. I think that says something, If you were looking for a store of value in a time of crisis, who would have thought that Bitcoin would be back above where it crashed at? I bet a lot of people probably wouldn't think that, but that's the reality right now. And I think that says a lot about this asset and, where and how far it's come in, this situation that we're in right now with just, the Fed printing ungodly amounts of money, which, by the way, they just announced that this next quarter, they're going to spend $3 trillion to help ease the pain that, this whole shutdown and everything's causing. So the narrative for Bitcoin is strong. I've been saying that for a while. I mean, as central banks become more irresponsible, Bitcoin becomes more attractive, and that's kind of what we're seeing. We're seeing a lot of people talk about, what's going to happen with the U.S. dollar. Is it going to be an inflationary deal, or is it going to be a deflationary deal? And for the longest time, I thought that we were going to have an inflationary crisis where central banks were going to print ungodly amounts of money like they're doing right now, and it was going to cause like mass inflation, cause the dollar to collapse. And then, we would see the demise of the dollar ultimately, and then, we would see that transition to the next reserve currency. And usually there's a break between, a time and period where there's two reserve currencies being used as reserve currencies before like a main switch. It isn't like one topples and then all of a sudden we just like have another one. It's usually like a gradual switch over. So we might see that in the next 10 years, 20 years. But I wanted to show you guys this tweet, and I'll put this tweet in the description of the video. But Raoul, he talks about the dollar wrecking ball. and he basically makes the case for the deflationary problem that we have right now. He basically says that there is a dollar shortage right now, basically because a lot of the foreign countries and everything, there is a liquidity crisis when it comes. Everybody's looking for U.S. dollars. They need to settle their debts and everything in U.S. dollars. So everybody's hoarding the reserve currency, which is the U.S. dollar, and it's causing a crisis right now. There's a shortage of U.S. dollars in the world. So that's why these central banks realize that they can print a lot of money without actually causing massive harm to the U.S. This is causing major harm to, and he talks about this in this thread, how it's causing major harm to all the other currencies. All these countries' other currencies are going to shit since they started printing money. And they've been going to shit for a long time, but now that we're printing exponentially more, it's causing massive problems. He says, you see, the biggest problem the world faces is the dollar. We are in a vicious doom loop where slowing growth causes the dollar to rise, which causes slower growth, which causes the dollar to rise, as all borrowers play musical chairs to get access to the dollar to service debts. And he just goes on and he says, the global system is just not set up to deal with this. It is an ugly situation with almost zero options without a change in the entire system. No printing of money will solve this. It is structural. And I just think it's really interesting. I think you guys should read it. He's got a lot of great charts, a lot of great insight. It's a great macro overview of what he's seeing play out. But basically, yeah, it comes down to he thinks there's going to be more of a deflationary problem that we have, where there's just not enough dollars to go around, which is going to make us print astronomically amounts of money, and then it's, eventually it's just not going to be sustainable ultimately in the long run. So super interesting. Like I said, I'll put the link in the video so you guys can check it out. But I wanted to talk about the monthly levels. I mean, like I said, last time I did a video, we were right down on these levels right here, and just trying to get above this 7.5 area, and we were kind of struggling. And I really thought that we were going to see a price dip and maybe revisit like the lows of the close, the monthly closes. Maybe not the low down here, but like at least down to here. And we never saw that. If we zoom in, we've really just been steadily just going up and up and up. This level, this monthly level, we kind of struggled to get above, push us back down, and then we finally got above it. And both of these monthly levels were really tough to get above. But when we finally did, man, we shot up. It was like, what was it? April 29th. Yeah, that day was crazy. Market was just going off, I remember. But yeah, if you zoom in, you can see how important these monthly levels are. See, this is the daily chart. So I like to map out these monthly levels, keep them on my chart, and then I can zoom in a little bit on the daily, and then you can actually see how price reacts to these levels. I mean, you can just see it plain as day how important these levels are. Like, we got above this monthly level, we came back down, tested it, came back up, tested this monthly level twice now, and then we came back down and retested it again. So like, super important levels. If you're trading, these levels are basically what I base my trades around. Just because they're way more, they're harder to break through and they're more likely to bounce. So it's all, trading is all about probabilities, and the monthly levels are the more probable areas where you're going to see a bounce, or you're going to see like resistance. So I like to keep them on my chart. As you can see, we're kind of caught in between these two levels right now. But the daily close today above 8,800, which I think is important. That means that we've tested this candle close twice, and we're still above it. So I'm still bullish Bitcoin. I think if we pull out the Ichi cloud, I know in my earlier videos I haven't used the cloud too much lately. I talked about this weekly cloud and how the levels have just been ridiculous as far as calling the shots. I mean, came down into the cloud, bounced off the wall of the cloud, came up, retested the top of the cloud, and then we were making our correction down towards the bottom of the cloud, and that's when the coronavirus hit. And then we blew through it, obviously, came back down here. Our tanking came below, the blue line came below the red line, signaling a bearish trend. We're below the cloud, bearish trend. And now Bitcoin, and it's that tank in that blue line was actually the resistance, the same as that monthly level basically. And we finally got above it. And now we're above the median, the key June, and it's holding strong as support right now. So that's what you want to see. The next target would be the bottom of the cloud right here, which would be 9.5. So right now that's my next target, and if we get to 9.5, we actually get into the cloud, then the top of the cloud would be the next target. And then if we see this tank and get above this red line, if we see this blue line eventually creep up here, it crosses the red line, so it's above it. And if price gets above the cloud, that's all bullish. And as we can see down here, the cloud looks like it wants to turn green. See, the cloud's red right now, which is a bearish cloud. Once this thing flips green, it's going to be a bullish cloud, signaling, bullish continuation, hopefully. Or it's going to signal that things are getting more bullish. It's just another signal in this piece of the pie. If this thing was max bullish, this blue line and the red line would be above the cloud, price would be above the cloud, price would be above everything, but you would have the blue line above the red line, both those lines would be above the cloud, and price would be above that, and then everything would be bullish on the weekly chart, which we haven't seen that since over here. See, price was above the cloud, above the tankin, above the Kijin. Price was literally just bouncing off of the tankin. You just set bids on the way up. Oh, Bitcoin looks like it's gonna correct a little bit. All right, I'm gonna place some bids on the tank, and bang, and it bounced so many times. So we've been accumulating, and then we've got the halving. I think it's the halving. We've got the halving in a week. It's about a week's time. Last time we had a halving, Bitcoin's price was $660, and it's sitting at 8,900 basically. So that just goes to show you a 4-year cycle of Bitcoin. I mean, it started out as pennies, then it shot up to, what was it, like $10, $13, and then it shot up to $600, and then it shot up to $20,000, and now we're about to have our next halving after this long period of correcting. It's a long period of correcting. We're coming up to the next halving. So everything still looks bullish. I'm excited. I wanted to show you this tweet by Jack. For those of you that don't know, Jack is the CEO of Twitter as well as Square, which is another app. I'm not really familiar with Square. I don't use Square. But he talks about how Square, the biggest problem as a company is that we can't act as an internet company. To enter a new market, we need to have a relationship with a local bank. Bitcoin essentially fixes this. And I just wanted to show this video so you guys could see and hear him talk about Bitcoin.
I believe that the internet deserves and requires a native currency. And that's why I'm such a huge believer in Bitcoin, because it just, our biggest problem as a company right now is we cannot act like an internet company. Open a new market, we have to have a partnership with a local bank. We have to pay attention to different regulatory onboarding environments. And a digital currency like Bitcoin takes a bunch of that away, where we can potentially launch a product in every single market around the world, because they're all using the same currency. And
So that's really important. I think Jack has been on the front edge of innovation in the tech world, and he is a big proponent of Bitcoin because he understands that having a native currency, a native digital currency between all of these countries and on the web, as global as the internet is, it's not confined to certain areas of the world. I mean, you do have certain areas of the world where the country does control the internet and it's like, super communist or, dictatorial. But for most of the Western world, it's more of an open network where, open and free network where it feels like a global area, a global realm, if you will, jurisdiction. And he understands that it really just would make things immensely easier if we had a native currency, a digital currency. And honestly, that's what Bitcoin provides. And it's a network that runs, essentially by itself. I mean, obviously there's miners and everything running the equipment, but it's not, a company doesn't have to run Bitcoin. Bitcoin is a network, a protocol that's running by itself. As long as there's incentive to run the network, people are going to run the network. The network's always going to be there, and you can't shut it down. Countries can't shut it down. They can't steal your money. They can't take it over. Everything would be on one blockchain, and we could congregate in our own digital currency for the whole web. Could be one currency, and it could be Bitcoin. And I think Jack understands that, and that's why if you go to Jack's profile, he's got one thing that's in his profile description, and it's Bitcoin. I think that it's a pretty big statement. That's why there's so many people that understand technology and understand freedom. Like that's how you fall down that Bitcoin rabbit hole, and you start to understand, like, the system that we have just isn't working, and the regulation and the jurisdictions of fiat currencies and everything, it just muddies the water for everybody and stifles innovation immensely. I think we've hit that breaking point to where, like, because we're not allowing this type of innovation and this currency to operate so that the tech world can kind of all just migrate around this one currency and make just the most humanizing technology based around this currency, make our whole internet experience better. We would actually own our data, and we could remain somewhat anonymous, and we can, exchange value peer to peer without having to deal with a bank or without a third party, raping us with fees and extra charges and telling us that we can't send it to this person, or, they don't approve of that person, or they want to, lock your funds, or you have to worry about a bank printing it away. It's just, there's so many use cases in the tech world. People like Jack really understand that, and it's intriguing, and I'm glad that they're vocal about it and that they're putting it on the forefront. So I wanted to just bring that to your guys' attention. But yeah, that's about all I got today, guys. I'm bullish Bitcoin. If you guys are on Minds, add me on Minds, BTC Bo. Minds is a social network that uses crypto. You can earn crypto through sharing and liking and just interacting with other people's posts and sharing content and getting views and likes. And you can boost your content with your crypto that you earn through the social network. It's pretty cool. I post all my content there. My name is at BTC_Bo. Add me up. Let's talk about Bitcoin and crypto and share all the crazy shit that's going on in the world. But it's an alternative social network. I really think we need something better than Facebook. I'm really trying to migrate away from that. I don't think it's as healthy of a network. It's more geared towards advertising, and just every 3 freaking posts you see is like an ad. So always looking for an alternative, and I really like Minds. Minds has been pretty transparent about what they're trying to do. They're trying to build an open source social network where you know, it's powered by the users. It kind of has that Bitcoin cryptographic feel to it, where it's open source. You don't have to worry about your information being used for advertising or selling it to other people and shit like that. So definitely encourage people to use mines always. Yeah, that's all I got today, man. I'm bullish. I'm bullish Bitcoin. As you can see, we're bouncing off this key June. I wouldn't be surprised if we saw a pullback down to this monthly level again, this 85.40. That would not surprise me before we go back up here and retest this. But we retested it once, and honestly, the dips have just been getting bought up. It's been really awesome to see. Honestly, the past couple of days I've been actively trading, and I've hit some pretty awesome trades because people have just been buying the dip, man. It's crazy. Crazy.
First, Bitcoin is going to zero.
Do you hear that, guys? Bitcoin's going to zero.
Zero. When it comes out, zero.
Oh, I love it. Alright. I'm going to catch you guys in the next one. Peace out, guys. Before I let you guys go, I forgot I wanted to talk about this chart. One thing I like to do to break things down and make things simpler, like when you look at this chart, there's like a lot of shit going on, right? So what I've been doing is I've been breaking it into ranges to make things simple for myself. So this is the monthly chart, and if we look at the previous pattern, you know, we had the first halving down here, and then we had this next halving, and then you can see this price structure from the top over here, top up here, bottom over here, and you can kind of see how price reacted right here. This has resistance. Then we had the halving, we dipped below it, and then we came back up above it, and we busted through it. And if we look at the formation up here, it's very similar to me. This is a deviation up here, just like this was a deviation up here. And then it comes back down, and this is the bottom. We formulate a bottom at the top of this pattern right here. Come back down. Now we're at the halving, and we're kind of pushing towards the top of the range again. If we look at what happened here, we had the halving and then we dip. Maybe we'll get a dip. You know, sell the news into the halving. Maybe we'll get a dip. Like I said before, I think this dip right here is so severe that I don't think we're going to get a massive dip. If we do get a dip, then it's going to be, I think, you know, max severity would be like the top of this area right here, like 7,800 probably. But once it does that, you know, with the halving, I gotta assume that we're gonna lead into that fourth year, you know, post-halving pump. But I just wanted to share that with you guys. It makes things a lot more clear if you can break it into subsectors, you know, of the map, and so you can make more sense of it. You know, we got a top, a bottom, and then we formulated our range there from these tops and bottoms. And price got above the range, and boom, it broke out. And now we're dealing with the same type of range, right? We had this crazy bust, this boom cycle, now a bust, just like over here. Came down here, and then we slowly. We had this pump and then this sell-off, kind of more immediate. This was more gradual. I mean, it did have pumps though. It just wasn't as massive as this one. So we got the same thing. We just kind of corrected, and now we're making our way, hugging the top of that range again like we were down here, leading into the halving. So I'm excited, man. Bring it on. Alright, I'm done for real this time. I'll catch you guys in the next one. Stay safe, wear a mask, everything's gonna be all good.